at this point, as we head into the overnight session and tomorrow, we know that the market has been quite weak over the last 2, 3 days, but at the same time, the market's now getting a bit overextended and exhausted on the downside. So even though our bias would favor sellers, we also have to be mindful of the fact that the market is now overextended. This is similar to when the market broke out to the upside and we said, hey, even though the buyers are in control, the market's also overextended. And we had to be careful buying on this particular day. So, sort of a similar situation, except the upside move was pretty much linear, and it was very obvious that the market was exhausted, whereas, the downside move is not quite to the same extent. It's not the same magnitude of exhaustion that we saw on the upside. So, it's just something to be aware of. But as far as, which side is dominant right now, it would be the sell side. And in the overnight, we're going to keep an eye on that broken larger time frame support. And, we can use perhaps like 39.43 to like 53 as short-term resistance, or at least a point where sellers could defend. Just keep in mind that it is quite overdone on the downside, and that exhaustion might lead to a bit of balancing. And now, if we got a little bit of a bounce, like it wouldn't really matter much. I think it would still be a relatively weak market that we were dealing with. So I think as far as our short-term directional bias goes, neutral bearish makes sense here to me. And we can use, that 39.43 to 53 roughly as overnight resistance. And if we're holding below that area, then it tells us that we're dealing with a very weak market. Now, if we break out above it, that is not necessarily a signal of any notable strength. It would simply be a bounce off of a deeply oversold condition, off of an exhausted market, and sellers could still be active at the resistance areas above. So on the upside, if we do break out above the 39.43 to 53, then we can contend with kind of this first hour low area. So above 53, we can contend with roughly 39.61.5 to like 66.5, or I'm going to extend to like 68.5. So 61.5 to 68.5 gives you the confluence of the first hour low, the 24-hour mid, and all this consolidation that took place here. And if the market is really going to remain in a relatively bearish state, then we want to see sellers holding ES below this area. So if you want to kind of give it a little more room or be a little more liberal with that, then perhaps you can make it 39.61.5 to 73.5. That would be a pretty safe area for sellers to step in on first test. And if we get a bounce and the market fails at 39.61.5 to 73.5, and then we roll back down, well, then the bearish scenario could still remain in play. If we break out above 39.61.5 to 73.5, then that is a bit of a warning sign for sellers. And at that point, it could trigger some short covering back into the broken pre-market support and possibly today's initial resistance zone. So as we head into overnight, we really want to think, well, what needs to happen in order for this bearish structure to remain in play? If we take the swing high to swing low from this morning. This is what that looks like. So, you can see that if you're taking out 73.5 on the upside, you're breaking back above the 61.8% retracement, and that would be a very clear indication that we are not dealing with a bearish market. So if the market's really weak, you want to see it holding below, like I said, that 39, 43 to 53 area. And in the event that we break above it, a bit of a warning sign for sure, but not a big enough warning sign. And 39, 61.5 to 73.5 is going to be significant short term. And if we fail here and we drop back down, then the sellers are still okay. We take this area out, and I think it can lead to triggering short covering, and that can then lead to a move back up into the broken pre-market support and maybe even initial resistance. And a breakout above initial resistance would be a short-term or intraday bullish confirmation, and that could trigger even more short covering. So that's how we're shaping up right now as we head into overnight. And those are the areas that we'll keep an eye on, and how the market behaves at those areas in the overnight session will, of course, feed into tomorrow morning's trade plan, and it'll help set the bias going forward. Now, on the downside, you can see that this strong area of support, it marks a pretty long time frame balance, right? It's like the lows of the last several weeks here, and that's why the short-term bias is not full-on bearish, and that's why we need to continue to be flexible, because again, let's look at the daily chart here, right? The market's pulling back into a pretty important area. Sure, we took that area out by a little bit, but overall, I think this could mark maybe like the end of this short-term move, and then the market goes into a balancing phase again. This is the swing low of this entire recent balance. So, the market is overextended on the downside. It is overdone, and buyers stepping in here would be very normal and natural. And if we take this swing low out, I think then we're going to be dealing with a much more bearish situation, right? So if we take this out, which is the 39, 12.5 to 16.5 zone, that would be, I think, very problematic for the larger time frame structure. Right now, there's still potential for buyers to step in here, and there's potential for the market to continue consolidating in this range. But if you take out 39, 12.5 to 16.5, then you're dealing with a much more bearish structure on the daily chart. But for now, the larger structure still has potential to remain intact. Another point I'll mention is, if you recall from last week, we looked at the other markets, and we talked about how NASDAQ was now hitting this key inflection point, big resistance, where there was potential for failure. And that's why, even though the S&P rallied, we were being careful at those highs, because NASDAQ and Russell had not broken out above their respective resistance and above their respective swing highs. And you can see how well that worked out. The failure here gave us a heads up that, hey, maybe the breakout and the rally and the S&P is not going to sustain either. So, just something to make note of, so that the next time it happens, it's something that you're aware of and you are paying attention to. And on that same note, on the downside, if NASDAQ takes out, this, roughly, like, let's say 11,000, let's just say 11,400 to like 500, right? Like this range here. If this gets taken out, then I think it would be a bit more problematic for buyers. Like, it would be a bearish signal in the NASDAQ as well. But for now, so far, we can see that even NQ, is holding its recent lows from the last week or so. So, the markets are at an inflection point on the downside, similar to how they were at an inflection point on the upside. And buyers can step in, and then we might still continue consolidating, in this recent range. And again, that's why our short-term bias is not full on bearish, and we have to be open to buyers stepping in and, the market balancing, consolidating, chopping around a bit over here. Because yes, even though we've been weak, we are now at some pretty good areas of support where sellers could perhaps cover their shorts and buyers could start to step back in. So those are the ideas for the overnight. That's the big picture. Keep it all in mind because that is going to drive our trading decisions going forward. Anyone who, gets caught up in just the recent market action, I mean, those are the traders who typically get caught on the wrong side, right? Imagine the developing trader who saw the downside move here, missed it, saw the downside here move, missed it, and now they start aggressively shorting, right? It's happened to all of us. And we don't want to get caught in that group where we're not aware of the big picture and we are getting caught up in these, poor locations and we're getting emotional about it. So whether you were able to take advantage of the short side over the last couple of days or not, that's irrelevant going forward. Don't allow that to skew your view of the market. Understand and look at the market clearly. I think clarity is super important. If you're just clear and objective on your market views, and you don't allow the emotions to skew or paint the picture one way or the other, you are in the long run going to be much more likely to capture and actually have some edge in the marketplace. But, if you allow your trades to then dictate how you view the market, I mean, we know that's a recipe for disaster. So regardless of how you performed on Friday or Monday or today, that's history now. It's done. We need to forget that and we need to look at things clearly and be open-minded and understand that, yes, the last couple of days, the last 3 days have been quite weak, but now the market's overdone. Buyers could step in, and it's not a prediction, but the market's way overdone here. Now, if we hold below 39.43 to 53 in the overnight, well, then that's the market telling you something. But given this bigger picture view, it would not be surprising to see a pop back up towards the 39.61.5 to 73.5 area. And if that area gets taken out, then it could open the door for some more upside. And in order for the bigger picture to really become more bearish, or a larger time frame pattern to become much more bearish, we would need to take out 39.12.5 to 16.5. So that covers everything going into tomorrow. Let me see if there are any questions that we can quickly cover, and then we will wrap.